As a financial advisor, I see some absolute horrible tax structures by small business owners who are getting really bad advice from their accountant. Funnily enough, I even see videos on here each and every single day of just terrible advice that results in business owners paying a ridiculous amount more tax than what they really need to pay. This is the benefits of having the right tax structure and making sure that you get proactive advice from a good accountant who understands the value of structuring your business appropriately. So let's get stuck into it. So, typically speaking, the vast majority of business structures exist in either a company or a trust. Now, let's talk a little bit about a company. A company provides you with the opportunity to have a capped tax rate. And assuming that you're running a small business, you have a flat tax rate of 25% on any profit that you produce in that company, compared to as an individual or a sole trader that you can be paying anywhere up to 45% plus the Medicare levy means that you would be paying potentially up to half of any income that you earn over $200,000 at the end of this financial year in tax, which is a really, really bad outcome. Now, the idea is that for many business owners, when they get started, they might start as a sole trader or start potentially in a partnership structure, and they don't know when is the right time for them to transition into a company. Now, many of our clients, even though they might just be getting started from the beginning, we typically advocate having a company structure in the vast majority of cases because we want to have a structure that we can grow into. This avoids us having to pay extra costs through restructuring later on down the track. Now, the second is a trust. And the benefit of a trust is a trust provides us with the discretion over how we distribute profits, income, and capital gains in the future. The most common trust that people use is a discretionary trust or a family trust. Now, from my perspective, trying to run a business through a trust is typically not a great idea because a trust must distribute all of its profits each and every single year. So if you have a business that's run through a trust and you've got substantial profit, let's say you've got $500,000 a year in profit, then you're going to find yourself in a similar situation potentially as having a sole trader business where you've got to distribute all of that income to yourselves and end up paying the top marginal tax rate. Now, of course, there is an opportunity to set up a bucket company under that trust. However, this creates extra layers of complexity. And for many businesses, having a proprietary limited company where they can retain profits provides us with a really simple and straightforward outcome. Now, the great thing about having a really good tax structure is we have the ability to layer our tax structures to provide us with different benefits. For example, I have a family trust which holds all of my investments and all of my business interests. That family trust has a bucket company. So after I've distributed to myself and my partner, and we've got to an average tax rate of 30%, we distribute all of our remaining profits to a bucket company. Now, that family trust owns a holding company, and that holding company is basically the mothership that holds all of my business interests. That allows me to hold profits in an entity that doesn't have any relationships with customers or clients, and allows me to then loan money to various businesses for acquisitions. This provides me with a layer of protection. I hold all of my intellectual property in this holding company, and it allows me to have control over all of my business interests whilst having a layer of separation. Then I've got my trading businesses, which are all run through proprietary limited companies. And that ensures that each of those businesses has a flat 25% tax rate. They all stand on their own 2 feet, and then they have a direct relationship with my holding company. And having this structure provides me with a lot of flexibility and ultimately has allowed me to grow and scale now a business group that's got over 8 figures in assets. So just goes to show the value of having a great tax structure. So this is just one of 40 strategies that we implement for our clients as part of our financial performance scorecard. The scary thing is most people are only 18 out of 40 when they complete the scorecard. So if you want to see how you're tracking, click the link below, take 5 minutes to complete the scorecard, and you'll get a customized report showing you exactly what you need to do to improve the quality of your financial results in your business. So click that link below and let's see how well you do.